Welcome back. It's a day of good gains on the FMCG space. Another stock which is doing well is Bikaji, and this is after reporting what was the strongest revenue growth in the sector so far, with an 18.5% revenue growth, 15% underlying volume growth. The stock has already seen a bit of a move and today holds up with gains of almost 3-odd%. We do have the management with us, Manoj Verma, who's the COO, and Rishabh Jain, who's the CFO of the company, joined in to discuss the quarter gone by. Thanks a lot, Manoj and Rishabh, for joining in. Manoj, coming up to you first, first half of this year, revenues have grown at 18.5% with underlying volume growth of 15.5%. You've outpaced your earlier guidance by a bit at the first half mark itself. Now you have the festive season, you have the second half as well, which typically is stronger than the first half. So do you want to up your 13 to 15% volume growth and 2 to 4% price growth guidance for this year? Because you've already done 18.5%. Can you go up to 20% this year in terms of revenue growth?
Yeah, good morning and thank you for inviting us on this channel. This quarter has certainly been a good challenge, a good quarter with the growth. So the 18.5% growth, this is inclusive of PLI. And now if we net off PLI as well, so the value growth is 16%, which is what we have delivered, right? This is led by, the festive season, so which was sweets growth and also our gifting growth, which has helped us deliver this stuff. Going forward, we would stay with the guidance what we have given, because what will happen is that in next the quarter, so only October would be the one wherein we'll have the Diwali benefit. Rest 2 quarters would be the same. So therefore, I think we would stay with what we said. We'll continue to deliver the same growth.
All right. Hi, Manoj, as well as Rishabh. First, wishing you all a good festive season. And clearly, your numbers are depicting that. In a market that's down, your stock is up close to 3%. So good on you all. Now, the problem is inflation pressures persist. Palm oil prices, pulses prices, they continue to remain elevated. So given the kind of increase you have seen in some of your raw material cost, what kind of margins you're looking at? Because earlier you had indicated that it could improve by 40 to 50 basis points from year on as well. Please go ahead.
Yeah, so thank you very much. So basically, we have seen some pricing increase in edible oil as well as few pulses. But yeah, overall, we have been very proactive in passing on the prices to overall market distribution and consumers. That's what we're doing. In September, we've seen edible oil price and tax rate increase by 20%. So we have passed on the price in October month. So of course there is 2 to 4 week delay, but yeah, overall we are very proactive in passing on the price. But overall at gross margin level, what we see that we'll maintain last year gross margin. That's what we'll this year.
All right. So 20% price increase. You've gone ahead and increased your prices by how much?
So close to 2.5%, because overall it's edible oil price increase, edible oil tax rate increase was 20%. So we have passed on the price by 2 to 2.5%. That will manage our margins.
So what happens to your margin target? You had 13.5% as a margin target ex PLI for the entire year, increase of 40 to 50 basis points year after year. Will this increase in raw material prices impact that guidance, or will you continue to take price hikes until you reach that 13.5-14% sort of margins ex PLI?
So our target will be close to 13.5% margin. Yeah, EBITDA margin. That's what we are targeting for in this.
Okay,
and we
right.
have seen very good crop this year. So good rain. So we are seeing good crop. So by post November, we are already looking some price correction in few raw materials. So we are hopeful that we will cover this point.
Okay, let's talk about the recent investment you all made in Hazelnut Factory. You're buying close to around 53% stake for around 131 crore rupees. What are the targets, revenue targets you'll have on this particular asset? And 53% is what you'll have. Where do you all see this stake headed up to? Will you all make further investments?
So basically, this 131 crore rupees is into 3 years. So currently, we're taking 40% stake in this company at the valuation of 100 crore pre-money, and we invested close to 61 crore rupees. So currently, 61 in next 2 years will phase off for the investment. So by end of December 26, we'll be holding 53%. That's overall. But yeah, overall, you will see the numbers which they will do. So this year they will be doing close to 65 crore top line. So we are given 1.5x of turnover top line multiple, where you will see all the good bakery brand like Theo Brahma of the world who are getting 8x to 10x of the of top line multiple. So we got this deal at a very good price, and it's a very good brand. So we like the brand. We see good potential in this business. They're also into artisanry sweets, and also we see at least 300 to 400 crore top line in next 5 to 6 years.
300 to 400 crore top line in the next 5 to 6 years. Does that mean the remainder of the investment then comes in at a multiple of 1.5 times of 300 to 400 crores? Because then that would mean that, you're looking at least 200-300 crore of outflow for you to go ahead and buy the remaining stake. Is that a possibility?
So basically, we'll hold 53% in the company. So that's how in next 2 years, we have kept the overall valuation, and we'll be investing balance 70 crore rupees in next 2 years. So we'll be
And
holding
what are the
53%
margins
in the
that this
company
business operates on? What are the margins that this business operates on? Margins and return on capital employed?
So largely, overall, the margin EBITDA level, they are working at close to 12-13%, and this will increase to 15 to 20% in next 3-4 years. They are having
Nice.
a very good margin.
All right, take that point. Thank you so much for joining in. We'll probably, have another word at another time to discuss this particular acquisition in further detail. But for now, we'll take the fact that you're looking at 300 to 400 crore revenue coming in this business over the next 3 to 4 years, with margins improving closer to 15 to 20% from 12 to 13% over that period itself. Wish you and everyone at the team a very, very happy Diwali from all of us at CNBC TV18.
Thank you very much, and happy
very
Diwali
much.
to all of you.
With that, we'll slip into a short break, come back on the other side. We'll talk about a lot of other stocks that are buzzing around.